geez, the cross current, Steph. I'm thinking about layoffs and wondering whether the Fed eventually looks at some of this that's happening. And then I think about Barry Diller talking about how strong travel is. So if you're the Fed, it just depends on what you're looking at as to how strong the economy is right now.
Yeah, and you know what? Last week we got some pretty good job numbers across the board with JOLTS, 1 million more than expected, ADP better. Non-farm payrolls was certainly mixed, but for the most part the revisions were a positive. And then, of course, initial claims, which is more of a leading indicator, the 4-week moving average is down 27%. So, you know, so Joe, the job market remains firm, and that gives the Fed the cover to do what they're doing to get inflation under control. And you know, if Barry Diller's right and the services side of the economy continues to be strong, well, that's 70% of U.S. consumption. So, and that's going to lead, and that's where we have been actually seeing higher prices as well. So, look, I think there's a lot of negative sentiment out there. Seasonally, we're in a very strong period for the markets, especially after midterms. I mean, look, the S&P is still down 20%, the Nasdaq's down 33%. But I think the real story is the underlying rotation, Joe. We've seen a massive rotation to value from growth. The Russell 1000 value is down 10% on the year. The Russell 1000 growth is down 30%. And the growth is being led by, you know, the technology stocks just completely rolling over. And that was last week in spades.
Do you, when you talk about a strong economy and good job growth, in the back of your mind, is it like that's trouble? Is it good or is it not good? We're all faced with the sort of perverse reality. Yeah. Of trying to slow the economy down by raising interest rates, which means what we're trying to do is have a poor jobs report, essentially.
Yeah, I'm of the belief that good news is good news, but I understand what the market is saying. Here's the problem. We haven't even felt the Fed hikes yet, right? There's a lag. Even the Fed said this last week in their notes that there is a cumulative effect of higher rates and what that's going to do to the economy. So that's why 2023 opens the door for the recession, and that's why everyone's talking about that. Is it a mild one? Is it a deep one? Is it even one? Who knows? But I think we're pricing in a lot of negative news. The one number that the Fed looks at, I mean, they look at everything, right? The employment cost index, the unit labor costs, they look at prices paid, but it's the core PCE, and that's still just too high, unfortunately, at 4.9%. So they got to get that down. We got to, we have to take the medicine, unfortunately, as Barry Diller said, and just look and watch what's happening underneath the surface, because there are parts of the market that are doing better than the headlines suggest.
Business is on the ballot. What do you think is going to happen? Do you care? Do you like gridlock? Any viewpoint at all on what we're going to? It is an important day tomorrow, Stephanie. Whether it's important for the stock market, I don't know. People have differing opinions on that.
It's very important for sure, and I think the consensus is that it's probably going to be a mixed Congress. And as an investor, not as a person, but as an investor, I kind of like gridlock, right? So we don't have to worry about really big headlines or a lot of spending or a lot of other things, in kind of an extreme fashion.